What's up, investors? Welcome back to the Investors Club. Today we're going to talk about starting a dividend growth portfolio for beginners. If you like this video, go ahead and like and subscribe because it really helps me out. Thanks. First, you'll need to find a broker you can rely on and trust. There are quite a few reliable brokerages such as Robinhood, M1 Finance, TD Ameritrade, and more. I use Robinhood as you can see here, but I also plan to start an M1 Finance portfolio. I've looked into them and I really like their interface and how they do their drip program. Now that you have your brokerage picked out, my first tip to beginners in a dividend portfolio is to start small. Study some nice dividend stocks that have a history of paying out dividends. Stocks that I would suggest that have a history of steady dividends paid would be Coke, 3M, Johnson & Johnson, Pepsi, and P&G, Procter & Gamble. I do own some stocks of 3M myself, but I don't own any of Coke, Johnson & Johnson, Pepsi, or P&G yet. But I plan to in the near future because they're pretty good dividend stocks. Be sure to do your own research on stocks such as this and make sure you're comfortable with your purchases. There are many dividend stocks that are safe and appealing to new investors. Just search Dividend Aristocrats in Google and you can find a list of all the dividend stocks that have been paying a nice dividend for many years. Now, if you're not into picking your own stocks, then there are some ETFs that do hold dividend stocks. These ETFs will pay you a nice safe dividend yield while also giving you some good gains in the stock price. The first example of a dividend growth ETF is VIG. I pulled it up in Seeking Alpha to look at it. VIG is a Vanguard dividend growth ETF, and it has a nice 1.73 dividend yield. Although it's kind of smaller, it's much more safe than picking individual stocks. Another popular one would be DGRW. It's a little lower priced, but still has a higher dividend yield of 1.99. Like I said, it's a smaller dividend yield, but it's way more safer than picking your own stocks. I myself don't own any dividend growth ETFs because I enjoy the research that goes into picking individual stocks, but if I didn't enjoy the picking stocks myself, I think I would just own and hold these stocks for lifetime. Another tip for dividend growth portfolio is to use your Roth IRA as a way to hold your dividend stocks or ETFs. The reasons for this is that within a Roth IRA, you're not being taxed on any of the dividends you get paid, and you won't get taxed on any of the capital gains either. With dividends not being taxed, it gives you that much more of an opportunity to grow and reinvest those dividends that you're receiving. That is the most appealing aspect of a Roth IRA. Since you fund a Roth IRA with post-tax income, then you aren't taxed on that account when you withdraw it when it comes time to retire. That's a very brief explanation of a Roth IRA, but I can talk more about that in another video. My next tip would be to diversify, but not to a huge extent. Be sure to spread out across different avenues such as tech, finance, industrials, and so on. Try not to be too heavily weighted in one or the other. Diversification is good to avoid some risk, but also don't get too diversified. If there's a stock or a sector that you want to focus more on and see large potential in, don't miss out on that opportunity just because you want to stay fully diversified. My last tip for dividend investing when you first start out is to not get discouraged. When you first start your portfolio, you're just beginning and your dividends will not be exciting. You won't be bringing in the big money right away, and some people get turned off by that. Stay the course of dividend investing and don't give up. Slowly grow those dividends and forget about making those quick gains like you see some people claiming. Keep your head down and continue to invest in strong companies. And I can almost promise you that someday you'll be making some nice passive income with your dividends. I want to show you some of my dividends. An estimate of my dividends for the year. Just to show you guys just an example. September, pretty small, $18. October, $60. November, $35. December, $47. January, $47. February, $53. March, $14. April, $76. May, $31. June, $47. July, $65. August, $31. And October, $16. Now, right now that doesn't seem like much, but as you reinvest and make those dividend payments work for you, it'll just slowly snowball over time. I'll go into it on another video about how dividend investing really starts to snowball as you start making that passive income and reinvesting all your dividends. Okay, well, those would be my tips to a new dividend investor. I myself am just a beginner, but these are some things that I have learned on my short journey of dividend investing. Be sure to like and subscribe if you like the video. Thanks.